Chainlink is sitting at $8.14, while the protocol underneath it is quietly being wired into the backbone of Wall Street, and almost nobody's connecting those two dots. That gap between what Link is doing on the chart and what Chainlink is doing in the real world is exactly what this video is about. Because if you're holding Link right now, or you've been watching it bleed from higher prices and wondering if it's cooked, you need to understand what the price is not telling you. And if you've never touched Link, but you're watching other top 20 coins run while this one sits flat, you need to hear the actual setup before it moves without you. Let's get into it. Here's the thing about Chainlink that most retail investors miss. They see the price at $8 and think it's just another mid-cap altcoin that pumped in a bull run and gave it all back. That's the surface read. The deeper read is that Chainlink isn't really competing with other altcoins the way people think. It's infrastructure. It's the plumbing. Think about it this way. Every smart contract on every blockchain, Ethereum, Solana, Avalanche, doesn't matter, is essentially a sealed box. It can execute code perfectly, but it has zero idea what's happening in the real world. What's the current price of gold? Has a flight landed? Did the borrower default? Smart contracts can't answer those questions on their own. They need a trusted data feed from outside the chain. That's what an oracle does. And right now, Chainlink is the dominant oracle network in crypto. Not one of the leaders, the leader by a significant margin in terms of total value secured. But here's where 2026 changes the math. This isn't just DeFi protocols pulling price feeds anymore. Chainlink's CCIP, their cross-chain interoperability protocol, is being used by traditional financial institutions to move tokenized assets between blockchains. SWIFT, the global messaging network that underpins trillions in daily banking transactions, ran integration tests with Chainlink. Fidelity and other asset managers exploring tokenized funds are building on rails that rely on Chainlink's data infrastructure. When you hear the phrase real-world asset tokenization thrown around in 2026, Chainlink is embedded in that story, whether the headlines say so or not. That's the setup. Now let's talk numbers. At $8.04, Link's market cap sits around $5 billion. For context, the total value secured by Chainlink's Oracle network has been measured in the hundreds of billions of dollars in DeFi alone, before you layer in the institutional side. The ratio of what this network does versus what the token is priced at is a disconnect that analysts who follow on-chain data have flagged repeatedly. If this is helping you think through the Link setup differently, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Realistically, what are the price targets for 2026? Depending on which analyst framework you use, and I'm pulling from on-chain analysts tracking Link's network growth, not influencer speculation, you've got a base case around $18 to $22 if Bitcoin holds above 80K, and the broader altcoin market gets a sustained bid in Q3 or Q4 of this year. That's a 2 to 2.5 times move from current levels. Not a moonshot. A realistic repricing of a top 20 asset that's been compressing. The more aggressive target, which requires a full risk-on rotation into altcoins and continued institutional announcements tied to tokenized assets, puts Link in the $28 to $35 range by late 2026 into early 2027. That scenario needs catalysts, new CCIP integrations with named financial institutions, a pickup in DeFi total value locked, and Bitcoin sustaining strength that gives altcoins room to run. Smart money positioning. Wallet data shows large Link holders. Wallets holding over 100,000 Link have been accumulating during this consolidation period, rather than distributing. That's not a guarantee, but it's a signal. When the addresses with the most exposure are adding, not selling into weakness, it tells you something about where informed capital thinks this goes. Now the bear case, because you deserve the honest version. Link has been a frustrating hold. Anyone who bought above $15 in previous cycles has been underwater for a long time, and that overhead resistance is real. If Bitcoin rolls over, and there are macro scenarios where that happens, particularly if rate expectations shift or we get a broader risk-off move, altcoins like Link get hit hardest. The $6 level is a key support zone, A break below that and you're looking at $4.50 to $5 as a realistic flush before any meaningful recovery. That's a painful drawdown if you're entering now. There's also a competitive risk worth naming. Chainlink isn't facing serious Oracle competition today, but the crypto space moves fast. If a cheaper, faster alternative gains adoption among developers, Link's value proposition gets diluted. It hasn't happened at scale yet, but it's the kind of risk you need to price in. And finally, the token itself. Chainlink has faced criticism for years about Link token utility relative to the protocol's success. The question of whether protocol revenue and growth actually flow back to the token price in a direct way is a legitimate debate. The team has been improving tokenomics, staking is live, but this is still a risk for anyone expecting a tight correlation between Chainlink, the network succeeding, and Link, the token repricing immediately. So what's the verdict? At 8.40, Link is not a trade, it's a position. This is the kind of asset where if you're wrong on timing by a quarter or two, you need to be comfortable sitting through it because the infrastructure thesis takes time to reflect in price. If you're looking for something that doubles in 6 weeks, this isn't it right now. But if you believe institutional tokenization of real-world assets is a multi-year trend, and the evidence in 2026 says it is, then Chainlink is one of the clearest infrastructure bets in the top 20. It's not sexy, it's not trending, and that's usually when the best setups mature. Watch the $9.50 level. A clean break and hold above that with volume is your first confirmation that the compression is ending. Until then, accumulating slowly near current levels with a defined risk point around $6 is how I'd think about sizing into this. Subscribe to Crypto Sayans. We break down the top coins every week, so you never miss a move. Hit the bell too, because the videos that matter most are the ones that drop before the price does.